You are watching Market Watch, the brief overview of the key events from the world of finance. Today, let's start with the cryptocurrency market, which is once again attracting the attention of investors. And if we have seen rapid growth in the last couple of months, then on Monday there was a really strong collapse of Bitcoin. Earlier, we repeatedly talked about the risk of sales, which was due to the banal approach of the end of the calendar year. Indeed, over the current year, Bitcoin has grown by more than 150%, which is a very good reason to take profits on previously opened positions. Given the fact that there have been no significant changes in fundamental factors, a 10% collapse in quotations in just one day is a bad signal for buyers. Despite a really strong wave of sell-offs, which moreover was not provoked by a real change in the news background, the trend still remains bullish. But at the same time, the collapse of the largest cryptocurrency is a clear example of what can happen if the U.S. Securities and Exchange Commission rejects one of the applications from the largest U.S. investment funds. Another test for investors may be the U.S. inflation report. If it unexpectedly increases, the demand for risky assets will decrease. Indeed, in this case, the probability of tightening the Fed's monetary policy will increase. Gold also remains in the red zone. Most likely, there are more reasons for the sale of precious metals, but the fact of liquidation of long positions at historical highs should not be completely excluded. But it is also important to take into account that the recession scenario in the United States is postponed or at least shifted in time. Recall that in the last few months, the risk of recession in the largest economy in the first quarter of 2024 has been actively discussed. Nevertheless, incoming statistics from the United States do not confirm this, which reduces interest in gold. Therefore, today's release of inflation data in the United States may have an impact on the dynamics of trading in gold and the American currency in particular. And in conclusion, let's talk about the oil market. After a prolonged wave of sales, the bulls still managed to ease the pressure, keeping the quotes of the American grade of WTI oil from falling below the level of $70 per barrel. At the same time, the key target for sellers is the $67 mark. Therefore, a further slowdown in China's economic growth and the appearance of clear signs of a deterioration in the situation in the United States may provoke another wave of sales. OPEC Plus is trying to fight this, reducing production, but at the moment it is extremely difficult for the cartel to keep sellers. Consequently, the further direction of the price movement will largely depend on the state of the U.S. economy. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.